Welcome to this explainer. Today, we are equipping you with the ultimate financial map for navigating the New Mexico housing market. If you're eyeing property in the land of enchantment, getting your numbers right is absolutely the most important first step you can take. Because let's be honest, falling in love with a house before knowing your true monthly costs is a really dangerous trap. That's exactly why you need a reliable financial map before you even start looking. So many buyers rush out to open houses without knowing their budget, and it just leads to massive disappointment. Today, we're focusing on exactly why using a New Mexico mortgage calculator before you make a purchase is the ultimate key to a secure financial future. So here is our roadmap. We're going to map your real estate journey, decode your mortgage options, reveal those hidden costs, explore the power of down payments, and finally, upgrade your financial future. Okay, section 1. Map your real estate journey, the calculator as your guide. A New Mexico mortgage calculator is essentially your survival guide out here. It empowers you to test drive loan scenarios and completely avoid budget surprises. Let's demystify how this tool actually works, because it's pretty simple. You just follow 3 steps to transform complex financial data into a clear monthly estimate. First, you input your financial info, meaning your annual income and your monthly debt, like car loans or student loans. Next, you add your loan details. This is where you get to experiment with different interest rates, loan lengths, and down payment amounts. And finally, you get your output, which is your estimated monthly payment combining both principal and interest. It's incredibly straightforward, but it really sets the baseline for everything else we're going to talk about. Moving right along to section 2, decoding your mortgage options, choosing your path. You know, your choice of loan type drastically changes the terrain of your monthly costs. A fixed-rate loan offers really high rate stability because your interest rate stays exactly the same for the life of the loan. That makes it perfect for easy budgeting if you're planning to stay a long time. Then you have the adjustable rate mortgage, or ARM. Now, this one starts low but fluctuates with the market. That means lower rate stability, which usually makes it better for short-term owners. And finally, we have incredibly accessible government-backed options like FHA, VA, or USDA loans. These are fantastic for first-time buyers because they offer low down payments and much more flexible credit rules. All right, section 3, revealing the hidden costs beyond the principal. We really have to watch out for the hidden monsters on our real estate journey because just doing basic math won't prepare you for the extra fees lurking in the shadows. Your principal and interest? That's just the beginning. The crucial point here is that if you can't put 20% down, you're going to encounter PMI. It's a temporary but significant bump in your monthly journey. It protects the lender, not you, but it's often a necessary stepping stone to get you into a home sooner. You just have to know it's coming. And your calculator absolutely must account for these extra expenses, especially since New Mexico property taxes vary wildly by county, ranging from around 1.49% to 1.72%. Lenders typically bundle these taxes, along with your mandatory homeowners insurance, right into an escrow account. If you just calculate your loan principal without adding these localized taxes and insurance premiums, your budget estimate is going to be dangerously inaccurate. Let's just take a breath here and let this expert advice sink in. Running these numbers early is about securing a lifestyle that won't leave you stressed out every single month. You aren't just trying to see if you can technically afford the absolute maximum loan. You're using the calculator to ensure you still have money left over to actually live your life and enjoy your new community. Now, your calculator is also going to generate something called an amortization schedule. This shows you exactly when your payments shift from mostly interest to finally paying down your principal balance. In those early years, almost all your money goes to interest. But this schedule acts like a map, proving how making even small extra principal payments early on can cut years off your mortgage and literally save you a fortune. Which brings us to section 4, the power of down payments, shifting your trajectory. Testing out different down payment scenarios proves that while 20% yields high monthly savings and gets rid of PMI, options like a 3.5% FHA loan keep homeownership highly accessible. You can see how stepping up from 3.5% to 10% gives you moderate savings and medium equity right out of the gate. It shows exactly how the cash you bring up front alters your entire financial trajectory. But listen, while 20% is sort of that golden number to avoid the extra insurance, remember that you don't always need it to get started on your home ownership journey. Many conventional loans only require 3 or 5% down. So please, don't let the 20% myth keep you from using a calculator to explore what's actually possible for your unique situation. Okay, our final section, number 5, upgrading your financial future. Preparation is key. Before you go locking in any rates, there are some really strategic moves you can make to upgrade your standing and become a much safer bet to lenders. Focus on boosting that credit score and paying down debt, because even a slightly better interest rate is going to save you massive amounts of money over a 30-year term. Lenders generally want to see a minimum score of 620, but if you can push that above 740 by fixing report errors and paying down high-interest debt, you're going to unlock the absolute most competitive rates available. And once your profile is strong, keep an eye on New Mexico market trends so you can lock in that rate at the perfect time. And hey, when it is finally time to shop around, compare the personalized touch of local New Mexico banks against the high-tech, diverse loan options of national lenders. Local lenders might offer special regional deals, and they have a deep understanding of unique property types in New Mexico, while national lenders often boast incredibly fast approval tech and massive loan variety. Definitely read customer reviews for both to ensure they're responsive and completely transparent about their fees. Also, whatever you do, please don't forget to leverage state resources like the New Mexico Mortgage Finance Authority, or NMFA. They offer incredible grants and workshops specifically designed to help first-time buyers conquer this market. Working with a certified NMFA lender can open doors to programs that might completely cover your down payment or secure a lower interest rate if you have good credit but maybe limited cash on hand. Now that you know exactly why running the numbers before you start shopping is so critical, it's time to find a New Mexico mortgage calculator and confidently map out your future today. By factoring in those loan types, the local taxes, the insurance, and the down payments before you step foot in an open house, you guarantee that your dream home remains a dream and doesn't turn into a financial nightmare. So I'll leave you with this. What numbers are you going to plug into the calculator today to take that very first step?